Thank you for joining me for another quick hits conversation. I'm Dr. Robyn, aka Mental MacGyver. I provide rapid response, high performance support and coaching to executives, founders, celebrities, and athletes. With me today, I have Steve Ramona. He's a keynote speaker, a podcast coach, and host of the podcast Doing Business with a Servant's Heart. I have Jim Lee. He's a financial futurist at StratFi. He has 30 years experience in the financial world and is the author of the book Foresight Investing, a complete guide to finding your next great trade. And I have Brandon Mahoney. He is the co-founder of LaunchPoint Labs, a national venture firm where he is the expert in creating sales departments. He is known as Dr. Startup. The question I have today, how do you balance the need for short-term profits against long-term strategy? Brandon, would you like to kick us off?
Of course. So I would say one of the most frequent workshops that I run is all about understanding the financial health of your business. And when it comes to balancing short-term profits against long-term strategy, I think the first thing we need to understand is that your long-term strategy is going to constantly change and evolve according to a number of variables. So flexibility is key there. And then more important than that is if you don't have working capital to remain in business long enough to see that come to fruition, you need to focus on your short-term profits. So I recommend being cautious and focusing on short-term profits until you get to that point where you have enough put away that you can comfortably make real long-term plans, because you can't really worry about tomorrow if you can't afford today.
Okay, Steve, what were your thoughts?
I think it's all about the mission. If the company is looking to be acquired quickly, they've got something hot, the profits are important for those potential buyers of their business. The long-term strategy is that person that says, I've got this passion, desire, and big why to build this company, to make change. Your long-term strategy is the key, because if you want to be there 5, 10, 15 years, especially everything that happened with COVID, you've got to have a strategy to get there. So it just depends on your mission.
Okay. Jim.
Yeah, I mean, cash flow is key. And Brendan's right. You got to have enough capital to cover your burn rate initially. And if you're in startup mode, it's gotten a lot more difficult raising money for startups. So if you're in bootstrap mode, you need to keep it lean early on.
The thing for me is I feel like investors want money right now, regardless of whether it burns down the company in 6 months. You know, there's a saying I've heard where the fastest way to get cherries off the cherry tree is to cut down the tree. But that's obviously not good long term. So my concern is that investors get involved, like you said, Steve, and they want it right now, make it happen hot and fast, and it burns the company out. Am I wrong?
I don't think you're wrong at all on that, which is one of the reasons why I try to push the businesses I work with to bootstrap for as long as possible. Take care of yourself for as long as you can, and then we hit a point where you can take the money that is being invested into your organization and make real good decisions with it based on the historical data that you've collected on how your sales have trended, how the market has trended. And that way you can actually use the money you're getting for the sake of growth and not for the sake of just surviving. So until you're at a point where you're like, oh, hey, I have money, and that bank account is slowly growing and growing, that's a healthy sign.
And strategy is important for both sides. I mean, even though you're looking for profit, you have to have strategy to get those quick profits. So I think, Jim, you said that the burn rate, you got to figure that out, and that's a strategy. But the long term and the short term are definitely what we're talking about here.
Mm-hmm.
One mistake that I see entrepreneurs do frequently is that what they want to do is sometimes different than what people want to pay for. And the sooner you can figure that out, the better off you're going to be.
So is there a balance? Is there a way to say it makes sense for me to grow more slowly now because it's going to make more sense in the future? Brandon, I love what you said about bootstrapping at first, because then you get to control, like, I want to look to the future. Where is the balance? How do you have someone who is an investor and say to them, look, yes, we could make flash cash, but let's grow a little more slowly? What does that look like?
My recommendation when talking to an investor is not finding an investor that just wants to put money into your business, but one that actually believes in your cause. Mm-hmm. So finding investors that have not just invested in any business that comes along, but if you believe heavily in a healthcare mission, find investors that have already invested in healthcare missions, because that tells me that they are aligned with your goal, and they're going to be invested not just financially, but they're going to be invested in the sense that they can provide you with good insights. So picking the right investor, it's kind of like picking the right partner, the right co-founder to continue growing your business.
I just think he's right on. Again, it's a relationship. It's a business relationship. I talk about that all the time in serving. You've got to be a relationship. If they're all bought in, they're just all about the money. Brandon, you nailed it. That's why you're a doctor. because it's an important thing in anything in business. And I think and money's so emotional. Look how emotional we are talking about this right now. So having that, being upfront, transparent, honesty, and having the faith in the business is key.
Bringing on partners can sometimes be a form of stress. So having an outside investor solves one problem in the short term, which is getting money, getting funding, but it adds a degree of complexity in the long term, in that it's no longer just about you, it's no longer just about your clients, but it's also about keeping your investors fed and happy too.
Let's switch gears a little bit. Let's talk about the really big organizations, the really big companies that they're publicly traded. They've got tons and tons of investors who want money right now. I mean, how often do we see them make choices because they're worried about the stock price and it's not good for the long-term health? In a large organization, what options do they have?
Well, they have the government.
Yeah.
I start to see that happening all the time. And what I try to do within my investing framework is I try to optimize outcomes so that you get the short term right and you get the long term right as well. And that's really ideal if you can do that, but it's hard to do.
And is that about balancing the portfolio with companies that are flash cash, make money now with the longer term growth, or can one company be both?
You really want a combination of momentum and vision, ideally.
Mm.
You want to have good momentum in the profitability in the short term, but you also want to know where you're going to go long term too.
Mm-hmm. I know, Steve, you've had really good success with your business and your podcast. Was that short term or long term vision? How did you run that?
Well, like anything, it changed. When I started, it was just meeting people, growing. Now it's become this financial vehicle and opportunity door. So again, like every business, I had to pivot. And now there's opportunities, like I mentioned before in the show, that have come. Now it's long term. Before it was short term, let's see how it goes. And I think a lot of people with podcasts realize that. But you just look at Joe Rogan. He's your Apple of podcasts, and he's not really a podcast. But he gets 100 million from Spotify. It falls into, okay, you get that fast cash, and he's changed his show. I've heard people that won't listen to him because he's on Spotify and they don't like the platform. I just talked to a lady yesterday. So you got to be careful, the Apples, the Googles, which are in my neighborhood, when you get big. And I talked to, that's the challenge. You get so big, you forget about your vision, like Jim said, and your customers, your product change. I mean, how much has Apple changed and their price point has changed where people are like, oh, do I really want an Apple anymore? But they've got such branding that's going to help.
And Brandon, your company, you help startups. I heard you say you expect that you want them to bootstrap early, but with your company, how did you actually do it? Was it a long-term strategy at the beginning, or was it just, hey, let's see if we can figure it out short-term first?
We went in with no strategy whatsoever. I mean, to be fair, the three of us got together and we basically just said we want to help entrepreneurs, and each of us already had full-time jobs. So we bootstrapped in the beginning, but we thought about getting investment. But when we thought about getting investment, it was, we're already stressed. How much more stress is it going to be if there's somebody else that's saying, hey, I just gave you all this money, now you have to give results. So we decided, let's do this part-time for now. Work full-time with our other jobs and then do this part-time. And slowly, when we made enough that we're like, oh, hey, you can now go full-time. So one went full-time, and then another one went full-time, and then I went full-time. And now we don't talk about getting investment anymore because we've built a very stable, and there was a lot of like ebb and flow of like, how are we going to approach different organizations? Do we have to be industry specific, or can we be industry agnostic in terms of what businesses we can help? When we first went out after it, though, there wasn't too much of a strategy. We were kind of figuring things out. My expertise is go-to-market strategy, is sales. I'm not a finance guy. It took some time to get there. So.
And Jim, you've been out on your own for quite a while now, I think.
Yeah.
For you, how did it start? Was it short term or was it a long term plan?
The funny thing about this is I just finished up my 10-year anniversary, and that's right. So my first year, I made $15,000, and my wife was very proud of me, and I'm like, that's awesome.
But now you're 10 years in and you're doing really well.
And it takes time, but that first year you have to have your nest egg to cover your house expenses and your home and all of that, because your business upfront will demand a lot from you, not only time but money too, realistically.
Well, that is our 10 minutes. Thank you so much for having this conversation with me and sharing your experience of how your businesses have been short-term or long-term focused. And I look forward to speaking to each of you again very soon.